Pre-market action on a Friday morning, right before a long holiday weekend. Solid gain for the Nasdaq. Look at that, up 166 points. That is 0.86%. Tom Hayes back with us to look at the markets this morning. All right, margins, profits and profit margins have been good this earnings season. Does that mean the rally continues?
I think the theme here, Stu, is stay alive till 2025. What do I mean by that? The music's playing right now. We're going to dance until that first cut, which is usually historically a buy the rumor, sell the news. So we might get a little choppiness before the election. That's also in line with election year seasonality since World War II. So if you're on margin, if you're on leverage, come off margin and leverage, stay invested, enjoy the volatility in October, and we'll get a year-end rally once we know that gridlock is in. Regardless of which party wins the executive branch, we just want to see gridlock. The less politicians can do, the better for the stock market.
You'd love some gridlock, wouldn't you? So it does well for the market, that's
Absolutely.
true. Now, you've got two stocks that you like. I want to start with Generac,
Yes.
the generator people.
70% of the market, the stock is down 70% from its COVID highs. Why? They over-inventoried because they thought they couldn't get parts. They worked through that inventory. It troughed in the fourth quarter of last year. It's re-accelerating. It's up off the lows of $70, $80. It's up to $155. We think this can go much higher. This was a $500 stock.
Yep.
They'll be generating similar cash flows within the next 12 to 24 months that they were at their peak. Interest rates lowering is going to help this because people finance the purchases, and we've got hurricane season right around the corner, so that's good for Generac, 70% of the market.
Yeah, and the grid ain't doing too well, is it? So
That's
nice
right.
to have a Generac in the backyard.
You got it exactly.
Okay. The other one is Intel. I noticed that it's got to 21. I say this every day. Intel's got to $21 a share, or it's reached 20. Is it a buy?
It is a buy. You know,
It's come down a lot.
It's trading at tangible book, okay? The government has backstopped this. They need Intel's foundry to succeed to compete with Taiwan Semiconductor. So they've given them money. They're going to stand behind the foundry. And they announced today they might separate the foundry business. They're going to be activists around this stock. They've hired someone to defend against activists, which means stuff is going to start to happen. So they've got their legacy business, the AI PC business. They're going to ship 40 million. They're still a leader in that business. And the Gaudi 3 competes with the NVIDIA 100 chip. It's half the price for twice the performance, 40% more energy efficient. So if you think NVIDIA is going to have a monopoly on this, think again. We've gone through the semiconductor cycle. Sooner or later, it becomes a commodity product. Intel's going to be able to compete and chip away at NVIDIA.
Going to get back to 30 or 35?
I think over the next 12 to 24 months, this stock can get not only to 30, I think their legacy business, excluding the promise of GPUs, I think their legacy business alone is worth $40 a share.
Okay. Well, take a look at it.
Thanks so much,
Tom Hayes,
Stu.
thanks for being here. Appreciate it.